All right, how we doing, everybody? I'm Nathan Brooks, sales representative with Sutton Group Select Realty, and I am joined once again with our good friend, mortgage broker David Yuzpe from Real RMA, Real Mortgage Associates. I had to think, but I didn't even look at my notes. But
You're perfect. Thank you, Nate.
thanks for joining us again, David. I know it's Monday here. It is March the 30th, and typically Mondays are a busy day for you. So I very much appreciate you making time for us. We had a great
Absolutely a pleasure. Anytime, pal.
Yeah, you bet. We had the two of us actually kind of chuckled because the response rate on our first video was exceptionally high. We had plenty of views and quite a bit of interaction, and it naturally lends itself to lead us into a second meeting, which is what we're going to do here today. For those who don't recall, the first conversation touched on fairly high-level topics, the current state, the mortgage business, how you guys are currently operating within the COVID-19 parameters. Of course, we know that all systems are a go for yourself because you are set up to work remotely, which is fantastic. You've been busy answering phone calls and outbound messages from your clientele. Today, what I think we want to do is talk a little bit more just on the economics in relation to the bank rates with the Bank of Canada. I know there's an awful lot of people out there with this conception that rates are dropping. The consumers are going to save money when it comes to their mortgage. But to the untrained eye, that may be not necessarily the right train of thought, is it, David?
No, and Nate, I'm glad we had a chance to kind of circle back and talk about this a little bit, because there really there's what was and there's what is. And, we're in a very different world. So conceptually, the Bank of Canada drops their interest rate. Those people who have a variable rate mortgage in the past traditionally have had an interest rate that was what we call prime minus, or a factor below prime, and they would be reaping these rewards. Right now, the drop in the Bank of Canada rate has far more to do with the economic crisis that we're currently going through. And I don't want to use words that start with R and D, like recession and the other one, but the direction is going that way. So the Bank of Canada, the Fed in the US have dropped the rates to down. Listen, it's at a quarter. So it doesn't mean that we as consumers are going to get a mortgage at 0% or near 0%. That's absolutely not the case. The drop in the Bank of Canada is done as part of the stimulus package to keep the economy rolling for as long as we can until it gets the chance to kind of tug back and we can beat this pandemic. There's something that you may or may not have heard of called herd immunity. Herd immunity meaning something that went back from many years ago when they were dealing with smallpox and measles, rubella, mumps, whooping cough, that when they were building these vaccines, they were actually building within our community something called herd immunity. This is now the goal with COVID-19, is to build this herd immunity. So as this is building, the economy is coming back, people aren't afraid to go out. I mean, today was my first day out of quarantine. I was out for a drive, and it's frightening to see how empty the streets are. We want people back to work. We want people out there enjoying their life, going to the park with their children. So that's these lower rates, Nate, just I know it segues a bit, but these lower rates are basically for the country. Those who were fortunate enough to have variable rate mortgages that are currently below prime, leave it, don't touch it. You're in a very, very good spot. If you've got prime minus 1% as of April 1st, you'll have a mortgage rate of approximately, you ready, 1.45%. Kind of the best we're seeing right now, which is available for, from a retail banking or retail mortgage banking perspective, would be prime plus 0.2% approximately. It's still 2.65. It's still cheap money. But what people don't understand is over the last 3 weeks, almost every day, fixed interest rates have been going up. This is what's called the liquidity crisis. I don't want to bore everybody with the economics of how money works, but the banks source their money from certain places. If you understand that the banks have, of all the Canadians that have deposits all over the country, there's about $80 to $83 billion, $85 billion sitting in people's bank accounts. But we do $83 or $84, $85 billion a year in mortgages. Well, obviously, there's not enough money after year one to keep doing mortgages. So the banks and all the financial institutions source their funds from different places. Right now, there's a crisis. The cost of money is going up. 4 weeks ago, we had, just as an example, We had from Scotiabank a high ratio mortgage available at 2.34%. That same mortgage today is 2.94. We're talking about a 60 basis point increase. And this is not the bank's profiteering. It's where the money's coming from. The investors are nervous. When the investors are nervous, how do you make them a little less nervous? Give them a little more profit. Or they demand a little more profit. That's basically just the way that works.
Interesting. Okay. So do you find that you're having those conversations multiple times a day right now? Because most of the clients right now are under that notion that, my gosh, rates are dropping. David, maybe now's a good time for me to refinance and capitalize on this. And so do you find it to be quite consuming to have that, 5-minute elevator conversation, so to speak, to educate the clientele?
We're having that conversation multiple times a day, Nathan. I think what you're finding is that actually we've kind of missed the boat. 3-4 weeks ago was probably enough spread between where the clients are and where our target rate would be to make it worthwhile. I guess maybe I'm not a typical broker. I'm not going to do a deal just because I can do a deal. The way that I operate is I actually will run the numbers on each individual situation, say, okay, your rate is here. This is our target rate where we can be. What's the cost of you getting out of the mortgage right now? And can we save money over time, and how much money over time? We won't do it just for the sake of doing it, which does happen within the broker and the bank community, just not anybody that I know. So, it happens. So you just have to be careful. If you've got less than a year left on your mortgage and your penalty might be, let's say, for example, $3,000, but in the first year, you're only going to save $2,000. Well, how does it make sense?
Yeah.
But if it's $3,000 and you've got 4 years of savings and we're going to save $6,000 all day long, it makes sense. Plus, we take a look at other things like other debts and things that are outstanding. And my world is, what I like to do is I like to believe in the world of cash flow, not in the world of interest rates. Specifically,
well, I was just going to say, especially at this time when people are they're working their way through job changes and impacts in terms of how they earn revenue. So I have no doubt that
absolutely.
Yeah. So you're probably having conversations around that, aren't you?
My biggest fear is when I'm talking to anyone and they're talking about, well, let's refinance, but I don't want to pay out my car loan, for example. Mike, I said, okay, well, first of all, why are we refinancing? Well, it's a little tight right now. Cash flow is a little tight. Maybe because of COVID-19, again, we've got one person that's essential and working, and one person non-essential and has been laid off.
Mm-hmm.
But we've got that brand new F-150. It's $850 a month, but it's 0% financing. And people say, I don't want to pay off the car at 0%. And I say, yeah, but it's $850 a month. So it's getting the understanding of cash flow rules, dollars in and dollars out. Because it doesn't matter what the interest rate is if you can't afford it. It doesn't matter if it's 0 or 20.
My wife and I actually, and being self-employed, and you can appreciate this, we went through a very similar exercise. Being in the beginning of the year, you do your best to budget accordingly for income tax, go figure. And it is that time of year where you look to make a fairly large payment, unless you've done, obviously, installments throughout the year. What government wouldn't like that? But selfishly, we like to stockpile it if we can. But we are having that conversation around, okay, you know what? When it comes to cash flow, working on a 30-day window, and we take it in 30-day chunks right now, both my wife and I are self-employed. What is in our best interest? Well, we take care of things. Maybe there is some credit card debt. We'll take care of that. But if there is something that we can utilize that money that we've allotted for income tax and the government allows us a defer window, why wouldn't we look at options like that? Because like you said, cash flow is the secret to the recipe right here, right now, during uncertain times. Am I off base in that thinking?
No, you're absolutely on base, and you're right on track. And most people truly are not self-employed. So, there's so many different ways that we have to look at it. But that's why when people call me and they say, should I refinance? I say, I don't know. Let's get all the information and let's do the analysis. It's only 5 to 10 minutes. Sometimes it's a quick yes or a quick no.
Okay.
but we also want to take, I'll ask all those additional questions to say, based on your age, okay, we're going to think about doing this, but are there new kids coming in the future? Are we talking about maybe extended leaves for a maternity or a paternity leave? Are you thinking about changing jobs? Are you thinking about going back to school, switching to part-time? We ask all those questions so we can really pin down what's right, because it is always going to be, Nathan, an individual decision. There's no blanket marketing for refinance now, the time is right. That's not the case. It's an individual.
Let me know if I'm speaking off base because I'm going off script here, by all means, David. But the secret is in the qualification, to any consultative sale. And not to say that this is a sale, but at the end of the day, it is. So consultative sales revolves heavily around a good, wholesome qualification. And I'm guessing this is where 26 years for you in the business, you could probably look back and think, to your first 5-10 years, the qualification questions, the questions you would ask in the early stages with Mr. or Mrs. Prospect are night and day compared to what you know now from having 26 years in the boots, to the types of questions that you could ask now. Is that, and I'm not trying to paint a picture to the up and coming mortgage reps in the business, but there is something to be said for that. And can you maybe even think of one example that comes to your mind? This is where you're drawing on experience, of course.
Oh, let me just give you one so I don't ramble on, because there are many. When I started 26 years ago, there's a couple of things you have to remember. 26 years ago, there were 4 of us in the city of London that were kind of peddling mortgages. There were a couple of brokers that basically did mostly the B stuff. And after that, there were like literally 4, 5, 6 of us. There was no competition to go out and talk to the realtors. So what was our motto? Well, 26 years ago, we could say that we're going to go out there and provide service, but it was very much rate driven. Now, I'm finding a lot of the younger people, now the training is very good, regardless of whether it's my company or another one. There's a lot of great companies that provide great training for the young folks coming into the business. So, but they're still very focused on rate. And rate is just the last thing in the world that I want to talk about. We'll find you the best rate, but we'll find you the best rate based on the circumstances for what you're looking for. What I'm going to promise you is the best product. And this is how, and generationally, as I get older too, I mean, I'm not just maturing in the business, I'm matured as a person. Even though I was, second career when we started, you kind of move along and you move along and you move along. But you go from baby broker I actually started off as a mortgage banker, and I went from a banker to a baby broker to a broker to an experienced broker to a senior broker to a broker owner. You kind of evolve, and with your life experience comes the ability to ask the right positioning questions to really help our clients. Because like you, when you're finding the best home for your client, it's because you're asking the right positioning questions, and that comes from the many years of experience you have in sales as well, not just real estate, which you're extremely accomplished, but you also brought all that experience that you've got, which is phenomenal experience from years ago from the corporate world. That's what makes you so darn good at what you do as well.
Oh, David, stop.
Come on, I didn't even crack a smile.
That was great. That was great.
But it's true, because but we're very much on the same wavelength. Having corporate and sales experience makes a difference, and it gives you a maturity to be able to do these things.
Yeah,
and ask the right questions.
Yeah, I would agree. I just want to be respectful of our time and of your time, because we've already touched. I know that Monday's a very busy day here. We talked a little bit about teeing up another conversation, and I'm more than happy to facilitate. This is obviously a recorded version, but we can leverage various platforms like a Facebook Live and get some interaction with various audiences. So I think what I'll try and do is put a poll out there just to see if the audience would like that. And maybe they can even help drive our agenda. I know we talk about things like just when is a good time to refinance? You just touched on it a little bit there. And it sounds as though through a series of qualification questions, maybe there's something simple as, and I'm just thinking out loud here, 3 to 5 questions that you would typically ask in the early stages that somebody can ask themselves before they even jump on a phone call. Not to say that you don't want to talk to people by any means, but
no, it's possible. But it's my first 3 to 5 questions are never the same.
Okay.
outside of your name, address, date of birth, and social insurance number, those are my standards, because then it's like, how can I serve you? How can I best help you? What is your goal? What are you trying to accomplish? But I think that, we can kind of finagle our way around it. I would love to do something live and to really be able to have some audience participation and have those conversations. And you know what? If we have to dig a little deeper, we can always set aside one-on-one with these people, or we can engage more people in the same thing that are having serious challenges or serious discussions around those questions.
Do you find that typically is one of the most popular questions you are being asked when your phone rings right now over the last week or so? Is, David, I'm seeing all these rates, these rate changes, how is this going to impact me? Is that the most common question you're getting asked right now?
The number one question I'm getting is that I see the Bank of Canada drop the rate again. How much did mine go down? And unfortunately, the answer traditionally is, well, none. Thank God we got you locked in 3 weeks ago and rates are low, because rates have actually gone up. And people are happy, but they want to ask that question. So whether it's an email, I think this morning we woke up to about 95 emails by 9 o'clock this morning, of which half of them were similar, but I respond to each one individually. I don't have a canned answer. So I'll reference the file. Sometimes I'll pick up the phone depending on who it is, or I'll just reply to the email.
You know what? Sometimes that's all the consumer wants, just the peace of mind, keeping their heart rate in check, knowing that everything is, so that they can focus on other fires that may be flaring up. And there's
they want to know that we're here, Nate, right?
Yeah, absolutely. Yeah, absolutely. So, okay. Well, why don't we do that? We'll tee it up for another conversation. We'll look to go live. We'll get some interaction, some Q&As on the live feed. And we'll talk around things such as, when is a good time to refinance? We'll delve deeper into how important is rate. And we could probably run through some scenarios on that. And if there's anything else that you would like to tee up, we can shift that as well. Aside from that, are you okay cutting it loose here today and getting back to the ground?
Absolutely. I want to give people a chance to digest what we spoke about. And, I should be, at this rate, I think I'll be done by about 9 o'clock tonight. So it'll be a good, productive day, and we'll on to the next one tomorrow.
That's right. I love it. Thank you so much, David. All the best. I'm going to sign off now.
Pleasure's all mine. Thank you.
Take care, buddy.
Cheers.